Good evening. This is Ken Long from Tortoise Capital Management with the daily health check and daily trading plan review for December 27th, 2010. We're looking at SPY right now, the market. We remain in bull quiet mode. Now we're going to look back 10, 20, and 30 days. The black line in the center is the 30-day regression line, still positively sloping up. Price is better than the 20-day, better than the 50-day, and better than the 200-day moving average. Support remains at 123, about 120, and at 117 from previous price reversals. ADX has increased to 26.72, so we're still well into a bullish move. We remain overbought on a 10-day basis with Williams percent R and an annual basis with Williams percent R. Shifting to the daily report, we're in bull quiet mode. You can see we're at the high end of normal on an annual basis. At 94 and a 10-day index, we're slightly overbought. The percent stretch above the 200-day moving average and the slope of the 50-day moving average are both coded green, so that's very bullish. ADX at 26.3, still very strong. The 10-day index gives us overbought, and the ATR percentage at 0.66 is as quiet as it has been in the last year. No signals on the overreaction in our channeling system, no signals from the gap statistics. The average best intraday move from low to high and high to low is 2.33%. You can see that we've been over bought for almost 10 days now. Pivot point for tomorrow is at 125.49, so it's still 2.5% above the key support level at 123. On this portion of the chart, you can see just how quiet that volatility has truly become. We have on the 10-day max pain, we have American Express, Intel, Alcoa, Walmart, and Merck. And among the ETFs, the gold miners, China, European large caps, Germany, and Hong Kong. In the pattern trades, we have 551W setups in the gold and junior gold miners. American Express, Boeing, Merck, Walmart, Rig, Silver Wheaton. And we have triple screen setups in AAP, CML, CTV, and FO. AAP is the only one that I know. Advanced Auto Parts, so that's worth looking at. In the Elder Safe Zone, we get strengthening trend signals from oil, Taiwan, and the VIX, and weakening signals in Chile, mid-cap growth, and steel. Looking at the daily tactical percent winners today, Bank of America, General Electric, JP Morgan, and Cisco. Percent losers, Procter & Gamble, Kraft, and Microsoft. Intel remains of interest to me. It's oversold on a 10-day and a 3-day basis, and that makes it attractive. McDonald's actually broke down hard today. It came in at -8 on the 10-day index, meaning it made a 8% new low compared to its last 10 days. On the ETF side, you can see just how many are in the green on the which is oversold, overbought on annual and a 10-day basis. The percent losers today, consumer staples, Europe, Latin America, and oil. Winning position today in natural gas, U.S. real estate, and financials. We saw a very good move today in American Express in the financials. For pattern trading, still quite a few dojis in the Dow and channeling signals in Intel and McDonald's, and 551W setups in American Express, Boeing, Merck, and Walmart, with max pain candidates, American Express, Intel, McDonald's remaining high on my priority list. In the ETFs, more dojis today, most of those revolving around the commodities and internationals. And the only we have no pattern trades, and then the max pain range compression remains with natural gas, gold, Europe, S&P Consumer Staples, Discretionary, and then the S&P Technology. In the Elder Safe Zone, weakening signals, as earlier noted, in Chile and mid-cap growth, and then strengthening signals in Taiwan and in USO. No change in any of the supplemental stats from last Thursday. And that's the daily market health check for December 27th. I still remain interested in the financials and the technology sector. We're going to you owe it to yourself to take a look at the 30-hour trades we did today in the chat room in the technology ETF. So that's all from Kansas. This is Ken Long from Tortoise Capital. Keep your powder dry, and we'll see you on the Objective.